Welcome back to my market analysis series. Um, I'm going to analyze Euro Aussie dollar, and we're going to get straight to it. So I like to start from higher time frames. Top-down analysis is where I like to start because it informs the rest of the price action in the lower time frames, as well as uh, confluences. It allows for easy recognition of confluences. Also, just context. I like to know where we're at compared to the previous uh, higher time frame candles. So we're going to start with the monthly. So what I like to do is to draw the range of last month's high. However, um, we're approaching the close of the month, but before price actually takes direction, I'm just going to use the previous month. So I won't wait for this monthly candle to close. So there we have our previous month's high and lows and mid-range marked out. Then as usual, we're going to go down to the weekly. This candle is the week. Today is on Monday, so this is the week that has just begun today. So we're going to mark out last week's levels as well. The mid-range. So what I do, I mostly analyze pairs which are already on my watch list. And this pair, I've just come across it. So it was in my watch list. I missed an entry, but the price action, last week's price action, combined with today's price action, has informed me that we might get another nice entry to catch the next move. So let's see where it takes us. So we have both our high time frame key levels marked out. That is the monthly and the weekly. Now, when I go to the daily, this is where I look for discount and premium. This is where I look for where the institutions trying to fill their orders quickly to push the prices lower or higher. And mostly I check daily order block. So as you can see right here, we have this daily order block that extends all the way there. So here it is. Since price fell from here, it hasn't revisited the order block, um, as we can see. But recently, during March, there was a no this month there's been an aggressive sell-off here. So I'd like to mark that out. I'll also like to mark out potential zones where I want to see the price bounce if it goes lower. Zones where I want to see I might see an aggressive bounce where there are high chances I'll see an aggressive bounce if um, price proceeds lower. So there you have it. I like to take swing trades because that's where my strategy has proved to be winning. So now we zoom in to the 4 hourly. So right up here, I observed the price was rising in such a formation. Then I always look for sell-offs in my areas of interest. So, for instance, this zone, when price reaches here, this is where I either take a short or a long. So, depending on how the price evolves on this zone and the nature of rejection, now my signal starts to build. So, the first thing we saw here, let me use this, is this sell-off. And if I'm sure if we zoom in and go to the left, extreme left to where the order block is, you'll see that this is probably there's probably a 4-hour order block up here. So we saw sell-off. Um, we saw a very aggressive sell-off there. Price went back and also a very aggressive sell-off. So that shows there's an imbalance, and this price is a premium. This is where most cells are being filled. So to me, that's an interest zone. So the initial signal I was looking for, as I always say, is a break of this structure. The final low. See this low that led to our zone. So I want to see price break the structure, break the low, then go back to the origin of the low. That is where I get my entry. So in the ideal scenario, after this break of structure right here, the origin would have been this 4-hour order block for me, right here. So I would have placed a limit order over there and my stop slightly above the order block. So after some time, I don't always place my stops adjacent to the order blocks. With time, I've grown an intuition. I know however price reacts at certain at my points of interest, I know it will not exceed the high before the high that formed the origin. But in some cases, I have to set my stop loss all the way up here because there was no aggressive. Yes, there was a break of structure, but the the selling, the falling of price was not as aggressive. So in this case, I place it there. Sometimes it's instinct, sometimes, yeah. So my ideal entry would have been there, and my target would have been right here. So I would be in the entry. I would be in the trade right now. So it requires a lot of patience because that would have been how long? Let's see. That would have been 28 days. Not bad if you're trading with size. So that would have been the ideal entry. However, zooming out on the daily, I see the same fractal but on a higher magnitude. So I see a break of daily structure here. This is the low that led us to my point of interest. You see? So the low was broken. Price created a short-term high over here, then went short straight back to origin. So here's the origin. Let me highlight it. This is the origin, the daily order block that led to the break of structure right there. So I've highlighted this area because to me this is inducement. This is inducement in this way. Since already the price has sold off and we have a slight pullback right here. See, a slight pullback right there. Sorry. Um, Market participants who shorted this slight pullback placed their stop losses slightly above there. So anticipating for a further downfall. However, these buy orders over here, the stop losses of the shorts, are what led to this aggressive gap up. As you can see, there's a gap right here. So that is one of the things I look at in my strategy. So on seeing that the daily structure has been broken right there, then we've revisited the origin and we've had this price action right here. This price action right here. This is distribution, which I also like to call okay, not distribution per se, but I like to call it a liquidity sweep. So going to the 4 hourly, you can see there's also a fair value gap right over there. There's a price inefficiency that has been filled. So that's that. And that combination of price action, that combination of price action gives me a reason to enter a short. So to me, this is a zone where large institutions are selling. They push the price higher. They trapped retailers to provide liquidity to push the prices higher. We've gotten back to my zone, and for me, this is not a late entry at all. So right off the bat, when I saw this price action, I entered the trade and placed my stop right above there, above the liquidity sweep. So I'm having a conservative target, which is the previous month's lows, rather than this zone. Why? Because this month is yet to close. So uh, instead of waiting it for the monthly close, I've placed a conservative target, and I'll also be further from the chart. So there's going to be high impact news for both currencies, the euro and the Aussie dollar. However, I believe through backtesting, high impact news only cause volatility and do not decide the direction of the market. So we might see uh, some weeks, then a drop. So I just wanted to highlight that I did not see any pair worth going through during the weekend, but there you have it.